Ryan Scared here, back with Make Florida Your Home, the largest residential real estate website in Florida. Thank you for joining us for another great episode here to learn today about FHA loan requirements. This is super important because it's so challenging for home buyers as you're dealing with all these sliding scales, requirements, boxes you need to check off to fall into these categories where you will receive an approval from the FHA, that it can be overwhelming, right? So if you don't slow it down and visit some of the pillars that allow you to have an understanding and ensure you check these boxes off, you're going to find yourself in a situation of frustration and failure. So today I want to dive into some pillars, give you some tips, some hints, and allow you to be able to prepare yourself with hopefully the help of us to look at your credit profile and prepare it for success. So the FHA loan is a government-backed mortgage. It's a mortgage that's lenient in regards to underwriting, credit score, and down payment amount. It's a great starter loan. It's definitely not the forever loan, but what it is it's a loan to get yourself in the door. It's a loan that's going to allow you to overcome some obstacles and barriers and become a homeowner, which is why we're all here. That's why you're on this page. That's why you're listening to this video. So let's dive into some of these pillars and figure out what some of these requirements are from a baseline level. I don't want to go too deep, but let's just talk about them. So the first thing is credit score. What does my credit score need to be so I qualify for this loan? And I always tell people to take advantage of the 3.5% down payment. You want to be at 580 and above. If your score is below 580, down to 500, you can still qualify for this loan. However, the down payment's going to go up to 10%. So may be a huge deal breaker for some, may not be that big of a deal for others, but general rule of thumb for a 3.5% down payment, 580 credit score, anything below 580 to 500, you want to prepare yourself for a 10% down payment. Next thing I want to dive into, job and work history. You got to have a job to qualify for basically any loan, right? There's some where you don't, that you can use bank statements or the collateral to qualify for. But for an FHA loan, they're going to verify your income. So what they want to see is 2 years of steady work history. They don't want to see gaps. Any gap over 6 months is an issue, and we're going to have to get creative and figure out how to overcome that. But typically, if we're able to look at your credit profile and we see 2 steady years of income and employment, you will qualify. Now, if you change jobs or you went from hourly to salary, that's fine. Not a big deal. We can piece that together and still get approvals. If we're trying to use things like overtime, bonus, commission, we want to be able to take that income stream and average it out over a 2-year period, which requires some math and some effort, but is done every single day. Down payment requirements. Like I said, the majority of home buyers purchase FHA homes putting down 3.5%, assuming that 580 plus credit score is there. If the credit score isn't there and it's below 580, these buyers are putting down 10%. So we want to make sure while we have the time, we're doing everything we can to get to that 580, or we're coming up with a savings plan to be able to attack and address that 10% down payment. Loan limits. Please see, I made a video all about loan limits. These loan limits are very important. They vary between property type, single family and condos, 2 families, 3 families, and 4 families. They also vary by county. Please spend some time here and make sure you understand where you're looking to buy, what that loan limit is, because if you don't and you get into a contract and it's above the loan limit, it's either one, we find a new house, which is no fun, or two, we put more money down, which is a little bit painful considering you're losing the main advantage of this program, which is your 3.5% down payment. The types of loans that you can use for an FHA loan in regards to term are two main pillars: a 30-year fixed and a 15-year fixed. Pro tip, I always suggest using the 30-year because it allows you to have that lower payment because it's amortized over 30 years as opposed to 15. That does not mean that you cannot make more or a larger payment or the equivalent of a 15-year term payment. However, it gives you the flexibility to go back to and make that minimum 30-year payment, which will be less. And I'm a big fan of flexibility. Life throws you curveballs, be prepared. Debt to income ratio. I have seen the FHA loan approve home buyers over 57, 58, 59%. We've seen approve eligible on these situations, but they've had compensating factors. Some of those may include a higher credit score, more reserves, which is money in the bank after the transaction's over. Typically, we want to see 55% and below, but never let that discourage you. We can always take a look, and you never know. The housing ratio, which is basically your income comparative to what just your mortgage payment will be. FHA has a hard stop at 47%. If you go to 47.123, whatever it is, anything over 47%, you are going to find yourself not getting what we call an approve eligible when we're using the automated underwriting system. So you really want to make sure that as we're putting offers in, as we're coming up with your home buying plan, we are tracking that ratio, because that is something that is hard with FHA. On every approval I've ever seen go through, anything over 47% on your front end housing ratio has to be sub 47%. Now that's a high ratio comparative to probably where we want to end up seeing most of our clients close at. A healthy ratio is probably somewhere in the mid 30s, but you never know the situation. You never know, maybe there's a partner, a spouse, or some family member that will be living in the house that isn't on the mortgage, so it's not that big of a deal to the overall situation, but just worth mentioning. The mortgage insurance. For FHA, there's two tiers on every loan. The upfront mortgage insurance premium, which is 1.75% of the loan amount, financed. And sometimes people get really worried about this. They see this mortgage insurance premium, it's $5,000, $7,000, $10,000. Like, Ryan, this is a lot of money. You know, it's being added to my loan amount. I get it, right? 10,000, 5,000, 6,000 seems like a big number to us. But keep in mind, this is amortized over 30 years. It's probably costing you out of pocket between $7 and $20 a month. And this has to be there. This is how the FHA keeps the loan program going. The second mortgage insurance component is the monthly. So if you put down 3.5%, the mortgage insurance premium will be 0.55% monthly. And if you put down 5% or above, it will go to 0.50% monthly. So not a huge savings if you put a little bit more down. However, if you're battling a debt to income ratio calculation, a quick fix that we often use is put another 1.5% down. That will obviously lower your loan amount and also allow you to take advantage of that lower mortgage insurance premium. So the next thing that I want to talk about is appraisal requirements. 3 S's: safe, sound, sanitary. Now, a lot of misconceptions are out there about how challenging an FHA loan appraisal is, and that's just not the case. The FHA loan appraisal just wants to make sure that the person buying the home isn't buying a piece of junk. They want it to be safe. They want it to be sound. They want it to be sanitary. They don't want the windows falling off. They don't want paint falling off the house. They want to make sure hand railings are there. And oftentimes they have agents and clients call me and say, Ryan, I'm not sure about this one. And I say, well, what is it? Well, it doesn't have a hand railing. There's some paint that's concerning me. And the good news is if we can negotiate with the seller and before the appraisal happens, we address these concerns. Take 2 2x4s, 3, 4 2x4s, screw them in, create a railing, take some sandpaper, put some paint right over there, screw in a screen, whatever it is. I'm not saying it has to end up being the Taj Mahal. What I am saying is if we see things wrong with the property, we can get ahead of that before the appraisal happens, work with the seller on addressing these concerns, and fix it. The FHA, it requires the property to pass this inspection. There's certain things in this inspection that are good for you as the buyer. From a seller's perspective, I hear that there are concerns with this, but if you're proactive, like anything in life, you can really address these concerns and pass these reports. Worst case, the appraisal comes back and says, we need a hand railing. We need this paint addressed. We need a screen here. Whatever the case may be, we go back to the seller. We say we need to fix X, Y, and Z. We do it. We send an appraiser back out and we get this done. So don't let the appraisal scare you. The bottom line is the FHA loan is a fantastic starter loan. Low down payment, flexible ratios, flexible on the credit score. It really allows you to get your stake in the American dream and become a homeowner. So now that you know a little bit more about the requirements, and keep in mind I stayed very surface level on these, I hope you feel better and I hope you realize that this is a great vehicle to get yourself to achieve your goals. All of the contact info, some more links to blogs are going to be in the description. Give me a call, use my team. We're here to help you. And I hope that you leave here finding a great understanding of these requirements, took away some great tips and pro tips from this video. And I thank you for your time. I hope you have a great day. Like, subscribe, and have a great day. Thank you.